So much for your time on SABC News. Gyongyi, perhaps I'll start with you. What are these alternative assets and what regulations govern them?
So alternative investments are broadly described as anything that we're not familiar with. So we're very familiar with equities, what we would call the listed space, equities and bonds and cash obviously, and property to a large degree. But there are many other investments that you can make, and what we generally describe these are as alternatives, but there's many different subsets in there, so you can go very far down. But the general grouping of anything that's not traditional, not what we recognise, we call alternative investments. From a regulatory environment in South Africa, they are regulated of how much you can invest in retirement funds, for instance, and that's quite tightly regulated. But there is an ability to invest for all retirement funds in South Africa in these alternative investments.
One of the alternative investments that you spoke about during your presentation was Bitcoin. Some people are hailing it as the next coming and an amazing form of trading. While there's a massive uptake, someone like the CEO of JP Morgan called Bitcoin a fraud and said he'd fire anyone who traded in it. What's the balance?
You know, Bitcoin is real. We don't think it's a fraud. But the real question comes down to valuation, because there's no intrinsic value to it. It has value only because people think it does. And because it doesn't have any underpinning sort of value, it almost appears more like the technology stocks in the late 1990s, where they kept going up because everybody thought they would go up, so they wanted to buy them, wanted to be in on it, and yet there really wasn't much there at the end of the day. So I think that has more to do with that as opposed to being something that's just made up.
Okay. Gyongyi, these alternatives that we spoke about earlier on have a low correlation to returns from equities, bonds and cash?
That's correct. If we think about the return streams and what we're trying to achieve there, we're trying to get something different than we would get in equities, bonds and cash. And that's why we target them as an investment opportunity set. And one of those different ways that we get the returns is that they're non-correlated.
Do people have a sense of fear and panic about these alternative assets? Perhaps not as much as something like Bitcoin. And how long will it take for these to become mainstream, if at all?
Sure. I mean, we deal with trustees all the time, and a lot of these are lay people, not investment professionals. And usually they get most concerned about technology, so venture capital, where the thought is, oh, you could lose all your money. And any individual investment has to be exceptionally risky. But what actually ends up happening is, yes, individual investments are quite risky. You could lose all your money. You could make an astronomical sum on a single one. But as these larger groups of them, like you might get in a fund, right, your risk goes down and the returns kind of narrow down. And then on a diversified portfolio of funds, your outcomes are much more normal. So they're a bit more like equities, hopefully plus some excess return to make up for the fact that they are not liquid.
Gyongyi, how much can you invest in alternatives according to regulations?
So pension fund regulation, which is called Regulation 28 in South Africa, limits a total basket of different types of alternative investments to 15%, but this includes hedge funds, private markets as well, and then you can subset that to the limit, so it's actually a 10% limit to each of those broad asset groups, but 15% in total.
Do you actively try and sell alternatives as a way of balancing people's investments, or is it more of a choice that people go, I'd like to maybe explore things that are not traditional?
So the solutions that we manage are total solutions, and when we're thinking about that, that's one of the investment opportunity sets that we access for clients. We obviously talk to clients about these alternative investments, but when we're thinking about it, it's really where does it fit in a total solution and how does it balance off with the mainstream asset classes such as equities and bonds.
Mike, an alternative to raising capital from traditional means is crowdfunding. You also spoke about that. How much of an impact is crowdfunding having on business, if any? And how much impact will this have on without the barriers of perhaps government funding or traditional banking funding?
Sure. You know, when we think about crowdfunding and angel investing, you know, it doesn't have a big impact on the normal company. These are generally startup companies. And usually this has become much more popular in the technology space. So a couple companies that we highlighted at the conference were Dollar Shave Club and Uber, who are two generally, you know, fairly well-known groups that took money early on from angel investors. But it's still fairly narrow. You know, the success rate is still only like you would have in normal startups. So the risk on any individual deal is still quite high.
Thank you so much both for your time on SABC News.
Thank you very much.